And then the one other thing I was confused on was Goodwill.
Okay.
I mean, I know the place, but
Yeah. Goodwill's weird, but not really.
not
Okay. So Goodwill, the only time you'll ever see Goodwill is after a sale of a company. Oops. 1, 2, 3. So once the entire business is sold, then the person buying it can account for Goodwill.
okay.
Okay, let's say you own Geico. Okay, and your balance sheet and everything shows me that your company is worth $5 billion, we'll say.
I wouldn't go that far out there.
Okay,
Okay.
I was gonna say 5 million, but that didn't sound quite right. Okay, so you have it. Now I want to buy your company from you, and so I come in and I say, I will buy it from you for 5.5 billion. Now you're not actually worth that much in assets and things, but I'm willing to pay you more because of your reputation.
Because of the name, basically.
Yeah. And so then on when I get all done, my normal balance sheet, all my assets and things will show the 5 billion.
It just wouldn't add up quite right because.
Okay, but then I also on my balance sheet I say Goodwill. 5 million.
Okay. That makes sense. So Goodwill pretty much just covers that.
That
It
extra that I was
explains why
paid.
you. Okay.
So it's just the extra that is paid on top of what the company's worth.
Okay, and so Goodwill is basically what you are willing to pay extra.
Mm-hmm.
Okay.
So you really could sell it for 5 billion because that's exactly what you'd be worth. You have assets and things and very little debt or whatever, that you're really worth $5 billion, but I say, I really like your company, I really want it. I'll pay you 5.5.
And I wouldn't necessarily, because if I sold it for 5 billion, I guess I mean I'd be $5 billion richer, but I wouldn't really make a profit. I just kind of break even on what my company's.
That's just exactly what it's worth right then.
Okay.
And so,
We don't need to worry, like, when it comes to depreciation and stuff, it won't ever ask you, we'll ask you to do like the depreciation of the company and then find out if someone.
you don't depreciate Goodwill.
Yeah, no, I was just
Okay.
saying, like, if we got, like, say we got the 5 billion after, I guess companies don't really have depreciation. Okay, never mind. I got it. I was confusing myself for a second, but. Okay.
So, pretty easy. But it only happens when the entire business is sold.
No, okay. So what about, like, say it was a patent that they sold, like, so say you thought your patent was worth $10,000 and they offered you $15,000 because they thought it was worth an extra $5,000.
Yeah, so let's say, so you sold patent
Mm-hmm.
for 15,000, you said?
Yeah, that works.
15,000
Yeah.
costing 10,000.
Yeah, like you thought it was, yeah, it was valued at 10,000.
So this is the time that they'd say something like, with accumulated amortization. That doesn't make sense, right?
Uh-huh.
But it does if it was like you sold a truck for $15,000. It cost you 10,000 in it, yeah.
Okay.
But we're just gonna stop here. We're gonna say this is its book value.
Okay.
Okay, so basically all we do is we say we got cash for 15,000
Okay.
and we sold a patent that was worth 10,000. Okay, so now we take our proceeds minus our book value,
Uh-huh.
and if it's a positive number, it's a gain. If it's negative, it's a loss. In this case, proceeds minus book value
It's
is
a gain.
it's positive 5,000, so I'd say gain on sale of asset,
Okay.
a patent or whatever.
Okay. So Goodwill is basically that, except it's for an entire company.
Well, this is what we would do. The other company would just say patent
Or-
15,000 cash.
Okay.
That's the company that got the patent.
Okay.
So there's no goodwill in there, even though they paid extra.
They're just like, we just gave them 15,000 cash.
Yep, so that patent is worth $15,000 to us.
Okay.
Now, if that was our whole business, was our one patent, then they could say Goodwill, but they won't.
That would be concerning.
Yeah. Well, I mean, they were
It
a small
happens.
business. All right, cool.
Okay.